Hey, everybody on YouTube, what's up? This is Banaj signing in, also on Instagram right now. So definitely want to say thank you for coming and showing us love. For those folks who are already on Instagram, you're already getting me, so you're good to go. All right, let me just move this over. I kind of want to have the same same kind of site. There you go. Good, same line of sight. That's one thing I saw last week when I was on this. I was like, oh, wait a minute, I'm looking at two different cameras. Like, I just want to look at one camera. All right, so everybody, hey, Chef, what's going on? Elliot Major, what's going on, folks? All right, so if you guys haven't, please join us on our YouTube live stream. We're on there right now. Again, we're going to be looking at several stocks, and I'm going to start pulling up my windows now so we can start looking at these. Let us open up the one that we want, Yahoo Finance. And the reason why I want to have the YouTube setup is that you guys can actually see me as I'm searching on Yahoo and looking at these different stock options. You can actually follow along and kind of get some guidance as to what we're doing and why we're doing it, what I'm looking at, how it looks, you know, all of that. You want the full kit and caboodle, and that's what we want to show you. I think a lot of times when you're on Instagram Live and you're talking to people, they're just kind of talking and they're not giving you stats. So for me, I want to kind of give statistics and show you what we're looking at. And that's why we want to do it this way. So I'm going to share my screen on YouTube. If you're not already there, please come through. And we're going to share an application tab. Yahoo Finance, share. All right. So we're open. All right. So the first stock that we're going to be looking at, and I'm going to put this down because I don't really need to hear that. The first stock that we're going to be looking at will be AMD, Advanced Micro Devices. All right. So what I want you all to do, and if you don't have me on YouTube, that's fine. All I want you to do is just kind of open up Yahoo. If you have a computer next to you, open up Yahoo, pull up your stocks app, and look at the symbol AMD. Okay. So I'm going to do the same thing here. So we're all going to follow along. Stock symbol AMD. Advanced Micro Devices. Okay, and you just pull them up. And what you will see about this company, I think this is why it's important for us to kind of look at the steps, you know, why we do it the way that we do it. I'll close out all this other stuff here. Okay. All right. AMD, Advanced Micro Devices. Okay. I'm going to look at a chart, and I love to chart first before I go into the financials, because again, when I look at a stock, the first thing I think on is, okay, how can I just quickly look at this stock and see what it's about? So first step for any real kind of investment person is we're going to just look at the stock and just take a run of the last 6 months. That's all I'm going to do. So if you're looking at me on YouTube, you will see what I'm looking at. All right. And you see that chart? This is the 6-month chart that I'm looking at right now. This chart looks pretty amazing. Over the last 6 months, AMD has gone from roughly on June 24th of this year, it was $52.93, well, 52.39. All right. And as of today, it is 91.55. All right. So it's actually trending up. And if you can see, there was a large jump right here in June, July, August, right here. Had a huge spike, and then from there it kind of plateaued. Now it's been moving back and forth. When a stock does this, kind of stuff I like that, and I'll tell you why. When a stock is trending this way and it's moving like that, where it has, but it's having volatility, that's folks buying and selling. That's folks trying to gauge whether or not the stock's going to keep moving up or trending up or not. There is a way to make money in this type of market. It's called the choppy market, and there are folks who kind of specifically want stocks like this, where they know that it's trending up, and they're going to ride the stock. And again, it's all about a buying strategy. So I'm going to ride the stock as it goes up, buy shares. As it drops, I buy more shares. As it goes up, I just wait. And when it peaks, I wait. When it drops again, I buy more shares. So folks can literally ride this. Let me show you how I would ride the stock, right? So let's say at the beginning, if I knew that they were going to be a good value. And I want you to see something here. See on the bottom here, the performance outlook? All right. So the short term, and this is on Yahoo Finance. This is not magic stuff. You don't have to go anywhere specifically to find this. This is Yahoo Finance, a very simple, basic site. It actually tells you, based on the analysis of the stock, that the performance outlook over the next 2 weeks is going to be, short term is going to be net down. That's 2 to 6 weeks. Midterm, 6 weeks to 9 months is going to be down, and long term is going to trade sideways. That's what this research is saying. What does that actually mean? When you see stuff like this, you want to start looking at your positioning. So if I saw this, and this is all I knew, let's say I didn't look at the financials, didn't do anything else. All I saw is the performance outlook looking like negative, and long term it's looking like it's lateral. I would hold on a stock like this, typically, right? Just because I don't really know what it's about. I'm kind of trying to figure out what it's doing. If I've already invested from June until now, I've already made 50% of the money. I've already made a killing. Actually, you've made almost 100% of your money. You made probably an 80% profit. That's pretty good, right? I would just hold on to this for now, unless I know that going forward there's more room for growth. You can kind of cap your gains and you can run. And one thing that I like to do, especially this is the performance outlook, without anything else being considered. If I'm just looking at this from a standpoint of this specific stock has already raised by 80-something% from June until now. I've already made 80% on this money. What I would do is take out my principal. Whatever I've already made and whatever I put in originally, I'm taking it out. So let's do a regular example. Let's say I had $100. Let's $1,000. You had $1,000 in this stock at $50, right? So actually, let's do it differently. Let's say you had 10 shares of this. 10 shares at $50. Okay, $500. That's the investment that you made here, right? Your 10 shares are now worth $91 each, $91 in total, right? Because that's the new price now, 91. So you've already made $400 on your $500 investment, roughly, right? I would take out the $500 and just let the 400 ride, essentially. And I think a lot of folks, when you see a market a market outlook like this, if you know that the stock's going to drop, if that's what it's saying, then take your gains, take your principal out, leave your gains in to keep rocking. Because again, stocks like this sometimes bounce again. And right now you're playing with house money at this point. So for me, having that strategy where you've already made 80% in 6 months. That's a pretty good investment return. Not a lot of stocks are doing that. So, that's one simple strategy for a stock like this. The actual research that I did says that this is actually a strong buy. So what that means is that regardless of what this performance outlook is saying, my deeper research says that this has the potential to blow a little bit more than where it is right now. So if you think that advanced micro devices is done growing, it's actually not. And if I go to the year chart, you can see this kind of had a lateral gain between the 40s and 50s for pretty much, how long is that? Since January until July, it didn't really do much, and then now it's actually trending up. So they're saying it's a strong buy, and a lot of the information that I read said that this is something that you kind of want to hang on to because it's going to keep growing. So stock number one, a strong buy. I'm down. I'm down with that. Now let's look at some of the actual profile and analysis. So let's go to, again, and this is in Yahoo Finance, everybody. For those who are joining us late, this is Wealth Wednesdays. We're going over 6 stocks right now, specifically going into the analysis of them, going through their story, going through their numbers, going through what people are saying about them, and letting us know whether or not this is a buy, a hold, or a sell. So this is Advanced Micro Devices, and this is a buy. Let's look at the profile of this company. And this is all in Yahoo Finance, guys. So you don't have to go anywhere to find any magic on this. So the description of Advanced Micro Devices operates as a semiconductor company worldwide. The company operates on 2 segments, computing and graphics, and enterprise embedded and semi-custom. Its products include x86 microprocessors and accelerated processing unit chipsets. So you can see what they are doing. Like, we're going into a very tech-heavy, decade coming up. And a company like this that creates actual items that are needed in a lot of tech equipment. Can you see where that's going? There's a story behind that. And the story is, if you're going to be in the new 2021 and going forward 2030, a lot of people are losing their jobs if their jobs are rudimentary. A lot of tech jobs are coming out and taking place of folks who have actual binary jobs, sort of like toll agents. If you guys live in New York, you know that we used to have toll agents who would actually take your change and all that stuff. Okay, they created a system that now you just drive and it's tollless. Technology replacing people. That's going to keep happening. It's going to happen at a faster rate over the next 10 years. So a company that builds micro devices, I can see why that's a strong buy, because again, the direction of the world is in that way. And now when we look at developing nations, let's look at Africa. Let's look at, China's developing still, even though it's a powerhouse, it's still developing. When we look at different parts of Asia, like all of these areas are going to have more tech. They're going to have access to more technology because, again, that's the way that we're moving as a society. So as those larger population areas start getting accustomed to having access to things like this, it just makes sense that a company like this that makes processors is going to blow. This makes sense. So that's why I think it was a strong buy. And this is just, again, in the description under Yahoo Finance. I'm going to go into one more thing, historical date. Actually, I'm going to go into financials. I'll tell you what to look for in here. So a simple way to look at a company and just kind of figuring out like what is this company doing is just looking at total revenue. You know, when you make money, that's a good thing for everybody, including your shareholders. This company, and it has year breakdowns of total revenue, and we'll start with that one and work our way down. There's ratios that you can use for this as well. We're not going to go into that because, again, my audience right now are going to be a range of folks who are technical gurus and folks who've never invested a dollar. Like, that's the breadth of the people listening on this podcast right now, or on this live, or on this YouTube channel. You stretch the gambit. So for me, I am not going to speak to you like you're all advisors. I'm not going to speak to you like you're all newbies, but I'm going to show you some universal things that work for both. So as an advisor, what I would look at, the first thing when I'm investing in a stock is, okay, what is the stock's performance? What has it been doing over the last 2, 3, 4 years when it comes to revenue? But companies not creating revenue of more revenue, that's a concern for me. So in 2016, this company was, and if you look at the numbers here, 4.2. Okay, that was the 2016. In 2017, 5.3. That's an uptick. That's progress, right? Then 6.4, 7.3, and then it jumped. It jumped from 6.4 to 7.3. So, and now total 8.6. So you're seeing a trend, right? And I like that. When you see a trend going on the revenue side of any company, that is a positive thing. The next thing you want to look at is, what's the gross profit like? Because you can make money, but are you making it efficiently? And a company like Jemai, for example, we keep speaking about them because of how they create their money. In the beginning of Jemai's rollout, they weren't efficient when it comes to money. They actually had locations in countries in Africa that were poor and not working correctly when it comes to like efficiency wise. They had a poor efficiency rate. Money was being swindled, packages weren't being delivered, they were being damaged, customers weren't fulfilling orders. Like, it was a lot of chaos in some of those countries. So what did Jemai do? Yeah, they were making revenue, but they had to shut down some of those locations in those countries because the revenue had to be a little bit more consistent, right? So when companies are getting more efficient, that's also a good sign. So an efficiency quotient that you want to look at is gross profit, right? Or net profit, I'm sorry. Let's go to net income. Let's see. Net income. So you can use either one. Net income from continuing operations, you can use that, but I would say net income from continuing distribution. So this right here. So do you see how this number started going from negatives? From negative 497,000 to 43,000, 337. Again, positive, 800. That's a good number. That's a good number. You want to see that trend. You want to see that companies are going from losing money to actually making money. And think of it if you had a business. If your business is running efficiently, you're making money, okay. How much are you keeping? How efficient is your business running? So we won't spend more time on this one, but I want you guys to just add this to your stock chart and just follow this stock. You know, I think that this company, again, is primed for success in the future. And we're talking about 2021 stocks that you can kind of buy today and just hang on to as they grow. This is on our list, and this is a strong buy. All right. Next stock that we're going to look at is Peloton. All right. PTON is its stock symbol. You guys can pull that up if you see it. This is the next one. So for those who know who Peloton is, you guys know about that bicycle? You know, now that COVID's hitting us and folks can't go to the gym, Peloton has been having record sales just because, again, folks are buying more systems for working out at home. And the way that this stock is growing, again, the first chart you want to look at is the 6-month chart. Just start with that chart and see what it says. So 6 months, let's look at it. That's a nice chart. Now, again, all growth companies don't always react and move the same way, but good ones do. So Peloton, back in June 25th, stock price was $58. Now, after a couple of upticks, you know, pandemic is still continuing on. Again, 136 high on October 15th, and now it has a high of on December 2nd, 161. So for folks who invested in this back in June, 55 to 162. That's a growth company. That looks really nice. And because the pandemic is stretching out a little bit further, again, folks that have these bicycles and that are actually investing in this stock, they're banking on folks wanting to actually stay home and do this. So I'm pretty cool with that. And if you look at Yahoo, and this is what I would suggest you all do, look at the performance outlook again. Remember, we keep talking about performance outlook, right? Right here, performance outlook. Short term from 2 weeks to 6 weeks, it's up. Midterm, it's up. It's another green is positive. And 9+, it goes lateral. So they're basically saying that over the next 2 weeks, stocks form well. But again, there's no guarantee. This is according to what they've seen and their research. Again, the folks who know much stocks, use Yahoo Finance. They kind of give you a blueprint as to what to look for. And sometimes these numbers are wrong. But if you know the story behind it and why it's happening, you can at least kind of have a guide as to what's actually working, right? I'm going to look at, see if there are any questions that I may have missed. Okay. All right, cool. All right. So again, you don't have to do any of the science. And a lot of folks that are investing, investments aren't a magic trick. Like literally, it's just research, access to data, and you knowing what data to find. You know what I mean? What to look at, what are your indicators? Again, Yahoo Finance, literally go to the charts and just look at the performance outlook. It gives you a really good indicator of what the stock's going to do. So they're saying that it's going to be a good long-term buy. My research says that Peloton is a strong buy. 2021. So if you are interested in kind of getting a stock today that's going to rock for 2021 and kind of be a difference maker in your portfolio, PTON. That's the next one that I think we should look at, right? Now let's look at the same stuff. Let's go to, when you want to find out more about the company, just go to profile. And under the profile tab on Yahoo Finance, you're going to get a breakdown of not only the key executives, what they're being paid, their positions, their title, where they're located, but a description of the company. And this is very important on understanding the story of a company. You have to understand what companies are doing. So again, description, for those who don't know, Peloton Interactive provides interactive fitness products in North America and internationally. Offers connected fitness products such as the Peloton Bike and the Peloton Tread, which include touchscreen and stream lives on demand for classes. The company also provides connected fitness subscriptions for multiple household users and access to all live on-demand classes. Do you see how they're diversifying their revenue stream? So when you have access to, first of all, online classes that people are paying for, you're getting money from that revenue stream. And then the actual bike itself, the product itself, when you sell one, you get money from that as well. So they have found a way to monetize not only their bicycle on the first shot, but for continuing users who get hooked on Peloton. And if you have a Peloton bike, you can just raise your hand in here and let me know how you experienced it. But I know a gentleman, who has a Peloton bike. I've seen him on it, and he crushes this thing. Like, this thing is not a joke. Like, the folks who use it, they swear by it. So a company that's diversifying its platform to have digital offerings and digital access to revenue, they're thinking. Right? If you can't go to a gym, just bring the gym home. Bring the gym to you. Bring the classes to you. And before you know it, interactive classes will be a thing, because it's a thing right now. It's already happening. I know that Strava does interactive runs for folks. You may have an interactive 5K where you're running a 5K with a bunch of other folks wherever you live. It's not a necessary route that you're running. It's just you're running 5K wherever you live, and you're joining a bunch of other folks at that same time to run a 5K. Digital events like that are happening more and more when it comes to fitness. And I can see that that's going to be something that I can see why this is a strong buy. Because as folks get accustomed to that, they're going to keep utilizing that. Health is one thing that doesn't change. It's something you continue to maintain. So again, this is in the company's profile. So I recommend that all of you folks, any of these companies that you see, add these to your stock charts. Most of you have an iPhone. Go to your Apple stocks app, add PTON in there. And I want you to just follow the news line on it. Follow the news articles as they come up. Once you go in there, you'll see that there's new news articles about each of these stocks. Just read up on it. I want you to be knowledgeable about the investments that you're looking at, but just know that this is, by the experts, considered a very strong buy in 2021. So it's like throwing a dart at something that's going to go up. Those are two strong buys that we have so far. The next company we're going to look at is, and I'm going to kind of power through this because it's already been 30 minutes and we only got to 2. I got to get to 9 actually. So we're going to power through. Okay. Next one is Ride. Right. Okay. All right. So this was a company that we were asked to take a look at. And again, we're going to go to our chart section. We're going to go to 6 months, see what it's been doing. Okay. That chart looks crazy to me. If you guys can see the chart, do you see how it looks? Has peaks at September 18th, then has a valley October 30th, then another peak at November 26th, and now it's kind of in another dip. Two things this thing shows me is this. One, it has the potential to go up and the potential to go down at drastic rates. So if you have your money tied into this, you could lose a lot of money if you pull out at the wrong time. So something like this, I would not necessarily throw a lot of my money at this specific chart because, again, I don't like a chart that is moving like a tooth. When it goes up and down like that, I don't like that. The lows are too low. But one good news, and this is when I look at charts, you want to look at this, right? So where the chart started off in July, this number is $10, okay? It went to a high of 31, and then the next low that it hit was actually $13. That's a very important thing to note when you're investing. I'll tell you why. If that $13 went down to this number here, $10, if it went past the $10 mark, leave it alone. Leave it the hell alone. Anytime a stock goes back down past its previous low, it's on a downward trend and you don't want to invest in it at that time. You may want to wait a little bit longer to see how long that trend lasts before you put money into it. And this stock, fortunately, its next low was only $13, right? Then it spiked up again, up to $28, and now its next low, according to right now, is only $19. So it's technically still trending up. You see that? So again, a way to track where a company is trending is looking at its lows. Is the last low higher than the previous low? So the question is the last low, this one, higher than previous low, which is this one? It is. You want to keep following that. As long as the lows don't go through each other, go below the previous low, it still has an upward trend, but it's very choppy. So you have there's a really strong opportunity for you to make a lot of money, but also to lose a lot of money if you're not timing it right. I wouldn't suggest you try to time this. What I would suggest you do in a market like this, and I'll tell you how to make money in this. So in this type of market, specifically, this exact stock right here, all you would do is invest weekly a certain dollar amount into this stock. If you know that it's going to trend up over the next 9 months, I don't care if it's doing this, because I'll tell you why. If I'm investing $100 into this stock, right, every week, $100. Well, in July, I'd only be able to afford 10 shares, right? $10, $100, 10 shares, right? In August, it's 13 shares, right? It's $13 a share, so I'd only get probably what, 8 of them? Okay, cool. As it keeps going up, this is September. It's $17. I'd only get maybe 5 of them. Okay, cool. But I'm still investing $100 into it, right? Okay, cool. In October, they'd be $21. So I'd get 5 roughly. In November, beginning of November, it's $13. Went back down. So for my $100, I'd get 8 shares again. So do you see how the amount of shares you're getting is dependent upon the stock price at that time? You're still accumulating shares and you're getting them at each of these levels. So regardless of what the stock price actually is, if I saw this doing this and trending back down, I would start increasing that $100 to 200. Because again, I'm reading the chart and I realize that this stock is going to be one that's going to be a positive chart long term. Okay, cool. If it's in a choppy market like this, when I hit a peak, okay, good. I know I hit there. Okay, cool. As soon as it starts going down, I'm buying more shares. When it goes down some more, buy more shares again. When it goes down again, buy even more shares. Try to start ramping up the amount of shares that you can buy as the price is going down, because when it upticks from 13 back to 20 to 26, that's a $10. That's a $13 gain on that $13 stock that you had, right? Those shares, you can just sell those off and continue to kind of use the money to recycle. So there's a strategy for this. And, you don't have to know where the stock is going necessarily, but as long as you've picked a good stock that has a long-term growth pattern, when it's going down, make it a point to actually buy more shares of that stock. And you'll, trust me, you will love yourself. There's actually a podcast episode where I discuss a stock that I bought. It was 33 cents a share. And it went down, I think, to 19 cents a share. It's like a penny stock, And I kept buying more. I was $33 worth, 33 cents a share. It started, dropped down to 22 cents a share, 19 cents a share. I started buying more. I had 1,000 shares when I was done, and it's not a lot of money. It's 1,000 shares at 33 cents. a lot of money. That stock on I forget what date it was, but it's in the podcast. If you look at our podcast, it jumped up to 67 cents a share one day, and I literally had just enough time, and I said sell all. Right, sold all my shares. So my $300 worth of stocks I sold for $700. Right, and to me that's what you can do in a market like this. When the stocks are choppy like this, you can definitely make money going down and going up. Just understand that if it's a good stock that you've chosen and it's going to be doing the choppy market, you can just continue to buy. And again, you could short these stocks if you have that skill. But for folks who are new to investing, without having to do any options, without having to do any of the extra sensitive stuff that you can do as a trader, you can simply just understand the value of, if I picked a good growth stock and the price is going down, this is counterproductive. I understand that if the price is going down, you don't want to put more money into it, right? But in investing, that is literally the best thing that you can do, because all you're doing is lowering your cost of average shares. What does that mean? Well, if I bought 10 shares at $10 and the stock price is now $22, my stocks have grown by $12, right? That's a good thing, right? So if you give me a chance to buy more shares at that low price, I would take it. Wouldn't you take that? So they gave you another chance to do that in October. In October, they said, oh, $13. Yeah, your shares could be worth, $31, but right now it's $13 for whatever the news cycle reasons are or whatever the corporate reasons are, but it's $13. To me, I see that as an opportunity to get my $13 to grow to 22. Like, I want that $9 profit. So I'm going to buy 100 shares at that price. Why not? And if I'm right, which according to this chart looks like it's going to do the exact same thing going forward, you can make a killing on the dives. So for right now, do you see that we have a high of 28? And now it's dropped down to $19. So right now, I would buy this stock, actually. Like, personally, I would buy this at $18 and ride it past its next peak. This company was, according to our investment research, it came in as a hold. So if you already came into the stock and you kind of have it, they're saying don't buy anymore, just hold. Me, I'm looking at the long-term aspect of this, and I'm going to bank on that. I'm going to bank on the fact that long-term, the stock's going to make me money in the next 12 months. So if it's going to be anything higher than $22, which I'm pretty sure it will, I'm going to buy that. Let's look at the company profile. Let's go through our rigmarole. Let's go through it. This company is based out in Ohio. Quick description. Lordstown Motor Corp, an automotive company, develops and manufactures light-duty electric trucks. It primarily develops endurance and electric full-size pickup truck. Lordstown Motors Corp was founded in 2019 and is based in Lordstown, Ohio. Now, with that as your only information, we know that we're going into a more green space when it comes to motors, when it comes to vehicles. Can you see where this is going? A Joe Biden administration for the next 4 years, giving incentives to folks buying electronic vehicles, do you see where this is? So long term, I can see this being a company that's going to be in the runnings with Tesla, with all the other manufacturers that are making electronic vehicles. Having an SUV option, I think that's especially in Ohio. I mean, that's snowbelt country. You may want to have a SUV versus a Tesla, a Model 3. So companies like this, definitely you want to look at these as long-term investments, because again, states like California who have a mandate that in 2035 all the vehicles have to be electric. There's no gas vehicles. If you held this for 15 years, what would happen? Right? So something like this, again, long-term, I would bank on that. And yeah, at $22 a piece, I'm good. Like, even look at today. It made 10% today. 10% in one day. Like, where are you getting that in the bank? So let's say you didn't even care about the stock and it was horrible. You didn't care for it and you wanted to day trade the stock, right? If you bought it this morning and you sold it this evening, you made 10% on your money. That to me that's what this choppy market is looking like. And I don't mind that. I'll take 10% on the stock all day. So again, this is another long-term investment option here. Next stock on our list is Uber. All right, so guys, the same thing. Go to Yahoo Finance, pull up the Uber Technologies, go to the 6-month chart, start with that. And again, you see a green, you see the trend. June, $29, now $53. So basically almost doubled, right? This one was seen as a strong buy. And why again is this a strong buy? And why? Look at Yahoo is telling you all the information. Short term, it's going to go sideways. Middle term, it's going to go up. Long term, it's a positive outlook. If you know nothing else about stocks, again, just follow the trend. open up Yahoo Finance, pull up the symbol, look at the chart, see if it's been from 6 months, see if it's been how it's been trending, and then go to the profile. Most of you know what Uber does, right? And if you know Uber, you know that they're making money through different areas. But let me read this to you. Uber Technologies develops and operates proprietary technology applications primarily in the United States, Canada, Latin America, Europe. So they have they're all across the world. It connects customers with independent providers to ride services and ride sharing services. They also have rides, eats, freight, and other bets in advanced technology groups. So again, Uber has diversified their revenue stream. And that's why I think that a company like them, they're well positioned. You have Uber Eats, you have, the ability to kind of like they're giving themselves access to extra revenue, and we're all in a pandemic right now. So guess what? If you want to go order food from a specific restaurant that you can't go sit down in anymore, you can Uber Eats that food to your house. So even in a pandemic, they're making money. And that to me, again, when you're diversified in that way, you're going to be well positioned for a pandemic styled, delivery system. The Eat segment offering enables customers to search for discover local restaurants, order meals, either pick up at the restaurant or have the meal delivered. The Freight segment connects carriers with shippers on a company's platform and enables carriers upfront transparent pricing and the ability to book a shipment. The Other Bet segment provides access to rides through various modes, including dockless e-bikes, e-scooters. Do you see what they're doing? They're diversifying their revenue stream. So companies that are designed to do things like this, you want to start looking at them long term. And again, I want you to think of this generationally, right? Let's say that you have a young son or daughter. They're 5 years old. Cool. How would this stock impact their life if you bought 100 shares of, let's say, Uber stock? When they're 20 or 18 or 19 or 20, we're still around because they diversified their revenue stream, that stock could be worth hundreds of thousands of dollars. Think of the folks who own Tesla stock when it first came out. Think of the folks who own Apple stock when it first came out. Think of folks who own, Microsoft. Like, you're gonna see these stocks continue to grow over a very long time if they're really designed well. I think Tesla is one of those companies that, again, you buy it now, even though it's $600. Trust me, in the next 20 years, they're gonna own the market because they already have the infrastructure. We talked about this last week, but Tesla is doing something that's really, and they're not one of our companies this week. We talked about them last week, but I'm going to mention this. Tesla's idea of creating the infrastructure for electric vehicles to be charged, those charging stations, is how they're going to make a killing. Think about it this way. Have you heard of any other manufacturer of electronic vehicles that's in the energy producing game when it comes to actually charging these vehicles? Like, do you see what they did? They literally sourced out all of their information about their batteries and their systems for Tesla so that everyone can start using their model to build their own electronic vehicles. But while they were doing that and giving folks access to their knowledge, they were building an infrastructure of literal charging stations across the nations that they're in, whether it's Europe, Canada, United States, Asia. Like, they're literally creating charging station platforms for you to be able to charge your Teslas whenever you're on a long road trip, right? And they're actually retrofitting those devices so that you can charge any electronic vehicle at their service stations. So they're essentially going to be the biggest electric gas station. Well, that's not really accurate, but the biggest electric station provider in the world. So when you look at it from that standpoint, whether they sell cars or not, whether they sell trucks or not, if they're the ExxonMobil or the BP of all electronic vehicles and charging everyone's car, and then charging them a fee for charging your car, they're primed. So don't think that $600 is going to kill you, because I guarantee you it won't. But companies like that, you want to look at that futuristically. So again, these guys are into e-bikes. So Uber is literally diversifying themselves, and they've had a huge run because of the pandemic. Again, we'll go back to the stock chart. Like, they literally have 6 months. They've doubled, right? Damn near. So look, next is XPO. We're going to the next stock, folks. XPO Logistics. All right. So you know what you guys know the drill by now. Okay, you go to the stock chart, pull up 6 month. I'm actually going to make this a little bit bigger. I can't make it bigger. Damn it. That's fine. All right. So look at the trend. This looks nice. This is actually considered a strong buy by the experts. And if you look at the performance outlook, again, follow the same short term. It looks like there's a down for the next 2 to 6 weeks. middle term, 6 to 9 months, it's a positive outlook, and long term, it's a positive outlook. And if you look at the chart, it's showing that. Do you see how the chart looks? And if you guys join me on Instagram, click on the link in my bio and head over to our YouTube. We have a Yahoo Finance page up, and I'm just kind of going over the details on there as well as we do this on here. We got 13 minutes, so I'm going to power through all of this real quick. So stock price was $75 in June. Now it's $118. That's pretty significant. It's not 80%, 80%, probably 80% gain there, and a very steady chart. And again, look at the previous low. So remember I told you about that previous chart. We want to see if it's lower than the previous low. So remember, the previous low here was 72.96. The next one over, 75.02, slightly higher. That's a trend that you can map going up. Look at the next low, $80. That's higher than 72, right? Again, keep going. And then this one is 82. It's higher than the last one, 80. So anytime you see a stock go past, so if in September, if this thing dipped down past this number here, past 76 or if it went down past this, you have trouble. So always going forward, always look at the bottom of a chart, $82. Okay, cool. And at the next low, as long as it's higher than that, that's how you can gauge if it's going up. $88, the next low, $100, the next low is 118. So that's a trending stock that's trending up, and I see that only growing. So you kind of want to gauge a stock based on its previous lows to determine whether or not it's trending up or if it's trending down. Very simple. Look at the stock chart. Again, look at the lows. As you're moving from left to right, just make sure that the previous lows are higher than the current lows. I'm sorry, the previous lows are lower than the current lows. As long as that's the case, the stock is trending in the right direction. It's looking good. Let's look at the profile quickly. The profile for XPO Logistics provides supply chain solutions in North America, France, and UK, Spain, Poland, Romania. So they're pretty much international. The company operates in two segments, transportation and logistics. The transportation segment offers freight brokerage services comprising of truck brokerage, intermodal, drayage, and expedite services, last mile service, primarily asset light, density, and definite regional, international. So they're a trucking company, essentially. And based on what's going on right now, goods and services need to be moved via truck. Transportation services, logistics. So yeah, there's a logistics company. So logistics are always going to be in play. And this is one of the last like brick and mortar industries that are going to pretty much, it's going to be the last one to be revolutionized, because there's certain things you can't replace. You can't replace a truck driver. You can just give him a better truck or give him better tools to deliver more goods. But you can't really replace the driver, right? And companies that still need to get goods and services, they still need to be driven that last mile to warehouse centers for distribution. So this part of the economy isn't really going to be affected as much. And I think, that I can see why this is a strong buy, because as we're going to a lot more delivery based, e-commerce, look at Amazon, that's delivery based. Like this is all freight. This is all the same industry. So I can see why this is positioned well. All right. Next stock we're going to look at is CRISPR. We're doing rapid fire, guys. We're going to do rapid fire for the last ones because we need to get through all of these quickly as possible. All right, so we go to the same thing. So CRISPR Therapeutics, let's look at the 6-month chart. You can see that it has pretty level for the majority of the last 6 months, and then took an uptick after the election, basically, and now it's at 173 from $86. Let's look at the performance outlook. Short term, 2 to 6 weeks. Positive, midterm, 6 to 9 months, positive, long-term, 9 months. Again, growth stock. Okay, it's looking like it's positioned pretty well, and it has a bullish pattern. So bullish just means that it has a positive pattern, has a positive growth pattern. A bearish pattern means that it has a negative outlook going forward. So when you hear those terms bullish and bearish, they just are determining whether or not a stock is moving up or it's trending down. Just so for folks who may not know what that is. Let's go to the profile so we can talk a little bit about what they are. Oh, hold on. I made a mistake. Sorry. Profile. Here you go. And CRISPR Therapeutics. And again, this is how I do my investigation, my research. I literally start with the chart, look at what it's been doing to determine whether I want to buy it right now, if I don't. And then I go straight to the description. I want to see what this company is about. Let me hear its story. So CRISPR is a gene editing company focusing on developing transformative gene-based medicines for serious human diseases. It develops its products using clustered, regular, interspace, short, palindromic repeats. Okay. You can tell that I'm not a doctor, so these terms I'm like, what? But gene editing therapy. So again, going into 2021 and for the next decade, I can see gene therapy being a thing. And again, that's probably why, because again, the current vaccine is a gene spliced vaccine, which is the first time it's actually done this. So I don't know if you guys know about the vaccine right now, but it's literally sending a message to your mRNA to tell it what to produce in order to prevent the proteins from actually attaching the virus has to your regular cells. You're not creating that message. It's literally sending the message to your cytoplasm. It's telling your cells what to create, and then your cells are going to take this message and then start creating what it needs in order to block the vaccine, to block the virus from attaching to your cells. Okay, this is one of the first times they've done this, and this has not been well researched, but it's gene therapy, and it's along the same lines as this company. So if we're looking at these types of vaccines, and this is going to be the nature of what we're going to be using to protect our population, well, a company like this is positioned pretty well to start looking at that. However, for me, I'm not buying this company. I'm not. This seems very seasonal to me. And again, today it made 1%. That's great. But even the experts they're saying that CRISPR is a moderate buy, so you can still make some money on this. I don't want a growth company that I'm waiting on like this. I want something that's actively doing things and that I can see. Granted, for $173, that price is a little too steep for me entering the market for a company like this. I'd rather, jump on an Uber or jump on a Ride or AMD just because I see what they're doing as opposed to this, right? I'd rather a company go from $50 to $115 as opposed to 173 to 200. Like that's not enough growth for me. So yeah, I would hold off on this one, even though has a good chart and it looks nice and it has a good pattern for the last 6 months. As you can see, it looks like after the election, it just popped off, which is great. Because at the same time that the vaccine was being rolled out. But yeah, so I would hold on this one personally, because that's all I can talk to you guys is personally. I can't tell you guys how to invest your money, right? So I can only say what I would do. All right, so the next one we're going to look at, we've got 3 more. Do we have time? Okay, 6 minutes, 3 stocks. Let's do this real quick. The next one is PLUG. All right, so you know what we're going to do? 6 months. Look at the chart. Very nice growth chart. Do you see that? $9 to $36. This is a company that if I had $176 to spend, I would buy this. Because if this is in June, I would buy as many shares as I could afford at $8 and watch it grow to 36. That's the kind of growth I want to see. I want to see you doubling and doubling again. I want that. That's the kind of growth investor that I am, because I'd rather invest $8 and have it do this than invest $176 and have it do something else. What's crazy is that my computer is actually dying, but hopefully it survives. Let's see. I'm actually plugged into a power outlet. Let's see here. Well, we have enough time. It's 5 minutes, whatever. We're going to ride this out, folks. If my stuff dies on me, hey, we rode it till the wheels fall off, okay? All right, so this one, and let's go to their profile real quick. Profile is Plug Power provides hydrogen fuel cell turnkey solutions for electric mobility and stationary power markets, North America and Europe. It focuses on proton exchange membrane fuel cells and fuel cell process technologies, fuel cell battery hybrid technologies. Again, this is a company that's based in this is hybrid technology right here, right? This is car batteries, cells. That's going to be the future. That's what the future we're looking at. So a company like this, I would rather invest a lot more money in something like this than in the one that we were looking at before, CRISPR. All right, because this is something that I know is going to pop off. I just know that. Next company is FCEL. You guys are following, writing these down. Okay, $13 buy-in. Okay, cool. Let's look at the historical data. Let's go back 6 months. Look at that chart. Wow. $2 entry in June of this year, and now it's at $13. You see what I'm talking about growth stocks? I don't care for 176 when I can get my $2 investment to be 13. Like that's where my head is at. I want something like this, because again, if you buy your kid this, buy 100 shares of that, it costs you what, $1,300? Or if you bought it here, it'd be $200, and now it's worth $1,300. That's what our kids need. Like they need us to invest in things like this, where we know that going forward long term it's going to be a thing. So fuel cell energy, short term positive, midterm positive, long term positive. What the hell's the problem here, folks? Right? This is something that just seems like it's very basic and simple. It's going to work. Description: Fuel Cell Energy, together with the subsidiaries, designs, manufactures, sells, installs, operates, and services stationary fuel cell power plants for distributed power generation. Electric. All to be said right there. All right. So that's a win. Last one is HON, and this was also the fuel cell was a hold on the experts, but for me, I am buying that. I would buy that personally because again, I like that growth. That growth to me is well worth my investment. If I spend $300 on that, I'm okay with that. Last one is Honeywell, and this was a question that we had last week. Let's look at their 6-month chart. We're going to do the same thing as we always do. All right, if 3 minutes, and we're at the last one, so we did it, guys. We got through, and it was actually 1, 2, 3, 4, 5, 6, 7, 8, 9. It's actually 10 stocks. I said 6. It was actually 10 that we got through today. This is a moderate buy, but this is Honeywell. Their 6-month chart looks amazing. They went from $142 back in June to $209. That's a very steady chart. And if you look at the previous lows, again, 141 is lower than 147, which is lower than 157, which is lower than 158. See how it almost went past it, but it didn't? That is a positive trend. It's still maintaining its positive trend. The next one, so this was what? 158, right? The next low was 161. It got close, but didn't hit. So again, when you see that, when you see a company that its next low is still higher than its previous low, you are in an upward trend stock, and you continue your process, continue buying, because again, it's still trending up. And if you had done that and you were consistent with it from June until October, you got the pop. You got the 161 to the 209, because that again is what these growth stocks will do. They're going to give you an opportunity to continue buying and accumulating more shares as it's moving slowly, and then you're going to get that. But you have to have shares for it to matter. If you don't have shares in the stock, you're not going to do anything with it. All right. So again, short term got a negative, middle term, long term is positive looks, which is fantastic. And if we go to the profile of the company, there's something again that all of you can do. You can see the CEO, you can see what they're being paid, you can see where they're housed in Charlotte. Description of Honeywell: operates as a diversified technology manufacturing company worldwide. The aerospace segment offers auxiliary power units, propulsion engines, integrated avionics, environmental controls, electronic power systems, engine controls, flight safety, communications, navigation hardware. This is a company that, again, is primed for 2021 and forward, because, again, it's already in the tech space. It's already creating things in software, in environmental software, in avionics. Like, it's already in a space that's going to grow, right? So something like this, they say it's a moderate buy. I would strongly buy this, just because, again, I mean, it wouldn't be the biggest part of my portfolio, but it would be a part of it because I like the direction that it's moving. I like the consistency of it. All right, so folks, that's it. All right, so I went through all the stocks. I'm going to give you all the titles again. AMD, Advanced Micro Devices; PTON, Peloton; RID, UBER, XPO, CRSP, PLUG, FCEL, and HON. Those are all the companies that we went through today. And I just want you guys to know what's going on, Wardy. I want you guys to know that these companies, again, some are strong buys, some are holds, some are moderate buys. But in my estimation, all of them have a potential to be considered for 2021 because, again, they're in the right space. They're in the right space for this. So that's pretty much it. The last thing I want to talk to you guys about is two things. If you are on this YouTube live, or if you YouTube or on Instagram, I want you to go into our profile, like and subscribe to our content on YouTube. It actually helps us. And going forward, we're going to start rolling out this content on a weekly basis where we're giving you actual ways of learning how to invest, the relationship you have with money, looking at building our village. Because again, everyone's at different levels in this game. There are folks who I talk to on Clubhouse who are expert traders who trades $100,000, $1 million portfolios, and I've traded $1 million portfolios as well. I want to build my own. That's my journey. I want to build my own million profile and show you how to do it while I'm doing it. Because again, everyone's at different stages in this. The last stock that I called was HON Motor Group. HON. That's the one that we have up right now. It's Honeywell. All right. So, definitely as we do this as a community, I think it's important that we normalize conversations around money and investments. And we can't assume that everyone is an expert trader. Not everyone is in that space, or everyone's an options trader. Not everyone's in that space. I want you to know the basics of how to even look at investing. What can you do? What tools are available that are free that you can utilize in order to do this. And I'm on TD Ameritrade. And if you go on TD Ameritrade, the amount of resources for these same stock symbols are amazing. You can literally get breakdowns from professionals about each of these companies and have a better understanding of the financials, the numbers, all of that stuff. So I would suggest that all of you, if you're new to investing, don't be afraid of the big giant in the room. You don't have to be perfect. You don't have to be the best investor. You don't have to have, $1 million today. But as long as you're consistently investing every single week or every single month in stocks that are going to grow and you know when to get out, you're going to be in good shape. So folks, let me check these questions to see if anybody has any questions for us. Revolutionels, hey, what's up? How you doing? Michelle Adams, what's going on? Rob, what's up? JB, what's going on, sir? Lovely. Hope you got a lot out of it. Sophomore Ange, what's up? Hackman, what's going on, sir? Elliot, Chevy, what up? Any questions, folks? This live is about to end real quick. If not, again, thank you so much for joining us. I was extremely tired. Came home and I was like, dang, I gotta get this Wealth Wednesday up. I know we had these stocks. After this, we're going on Clubhouse. I'm going to discuss these stocks further. If you're not on Clubhouse, I'm sorry, but we'll be there at 9:30. So until then, stay safe, enjoy your family. Continue to research the vaccine, understand how it works. Know that vitamin D is not a vitamin; it's actually a hormone, and it actually can help prevent a lot of the ailments from COVID. So make sure that your nutrition's up. And I think next week we'll talk about vitamins. And I actually want the hack on next week to talk about some stuff if he's available. Next week we'll do vitamins and stocks. We'll talk about it all in COVID because I think it's a really good way to wrap up the year. And one of the things that we do in our family household is that we actually plan for next year. And we do that around the time. So we'll talk about that next time too. So folks, thank you so much again. XRP, Mortal Group, I will hang on to that. I'll write that down and next week we'll talk about it. XRP, is that the one you said? Yeah. All right. We'll talk about it next week. I wrote it down. Okay. Folks, thanks so much. I hope this is helpful. And again, like us. I click the link in my bio to go to our YouTube, like us, add us. And, every week we're going to give you some good stuff to work with. All right. So thank you so much. Take care. I'm going to be on live stream on YouTube. So adios, Instagram. See you guys over on YouTube. Later. All right, folks, the Instagram just ended. I'm going to download that video now, and I'm going to share it to IG, and I'm just going to share it quickly without doing anything else because last time they just deleted my crap, and I was like, really? So I'm just going to go in and just, oh, no, you didn't. Yeah, so you And we're back. Told you we'd go till the wheels fall off, so they fell off. All right, folks. Thank you so much again for those who hung out and stayed on with us. I appreciate y'all. Yeah, computer died on us. Fully died, which is great. That's what we do. We sacrifice for our people, right? So everybody, I want to thank you so much for joining us here. We're going to end the broadcast so that we can pull this up live on our channel. Please like and subscribe if you aren't there yet. Please do that going forward. We really want to make sure that you guys get access to good content. We talked about 10 stocks today, and next time we're going to talk about COVID, the vaccine, what it's really going to do, how to plan for 2021. I think that, at the end of the year is a really good time to reflect on what you did and what worked in 2020, but also what you want to work better for you in 2021. This is really the time to set that up. If you have young children, I want you to start thinking about them and thinking about ways that you can invest that's going to benefit them long term and educate them. We talked about how to do it on YouTube today. We showed, going through Yahoo Finance, what to look for, what the indicators are on the chart, how to determine if it's going up, trending up or trending down, what the company profiles are, who the executives are, what they're being paid. All those things are things that you need to know when you begin this game of investing. It's not good to just go in with nothing. You got to go in with something. So with that being said, I appreciate all of you. I'm going to end this live stream now, but we're going to save it so you guys can come back and take a look at it. If you're now joining us late, kind of just when I put it up, you can just go through it and review the 10 stocks that we looked at. All growth stocks, all have different indicators. Some are strong buys, some are moderate, some are holds, but all in all, really good portfolio to be created. All right. So thank you so much, and I'll see you guys in Clubhouse if you're there. If you're not, we'll see you next week, Wealth Wednesday. Take care.